Hello and welcome to another market update. Today we're going to be talking a little bit about the inventory issue that we have in Clark County and nationwide, an inventory issue that is really exacerbated in Clark County. We got some data here from the NMLS. In the month of March we had 495 closed transactions in Clark County, which is a noticeable increase from February. We're sort of seeing the same sort of seasonal bump that we always get, but the numbers are down dramatically from the prior year. So closed sales are down almost 40% from March of 2022. That's a big drop, and it's something we're all feeling. But why are we still having multiple offers on most properties in that mid-price range? And the answer is simple. The inventory is down because we have a ton of sellers who don't want to give up that low interest rate that they bought at a year or 2 or 3 years ago. And so we're in this sort of in-between period of time where as much as we want sellers to sell their houses, they're not willing to go from a 3.5% rate to a 6.5% rate. So what we've been talking about is really paying attention to inflation, because when inflation begins to show its downward path, we will start to see interest rates, we hope, follow suit. And we think the sweet spot for interest rates is going to be around 5.5. And the reason we think, and it's not a prediction that we're going to get there, but if we saw rates drop another point from where they're at to roughly the 5.5% range, it's our feeling that the gap between where most people are locked in currently and a new rate of 5.5%, if they were to sell and move up, is a more manageable number. It's a delta that's more reasonable. And over time, hopefully as incomes continue to catch up, people will become more comfortable with that rate than they would today at 6.5. So like we said, we have a ton of pre-approved buyers, as do most lenders. There's a lot more people that want to buy than there are people who want to sell. With that said, there still are people who will need to sell because of different events in their life. You know, they have another child and they need to move up, or, you know, unfortunately people get divorced, or they have, you know, deaths in the family. There's things that happen that cause people to need to sell. And the other thing I think is worth keeping in mind, because we're all frustrated that rates are still high and they haven't come down as much as we want, but as we go through this, there is still going to be demand building up for people who want to sell and move up. They're just waiting. They're waiting for rates to come down. So that's why we're so hyper-focused on it, because every incremental decrease in rates that we see adds another group of people who are willing to sell. And so hang in there as we see inflation improve. We think rates will start to come down a bit. And as that happens, we'll start to see a little more fluidity in the market. At the end of the day, it's not as important to us in the mortgage business and the real estate business what home values are doing. They've only come down a little bit. We're down 1.2% in Clark County on average, year over year. But the value of properties is not what's important. It's the number of transactions that are occurring. And, you know, the data shows that we're seeing a seasonal bump, but that it's still well below where we were at a year ago. Another interesting graph that we see in this report from the RMLS, if you look at active residential listings, which we're all feeling like there's still not enough properties for sale, but it really is price point specific. It seems like homes in the higher price point are sitting quite a bit longer than those between the 400 and 600,000. But as you can see, if you look at this graph on page 4, which we'll throw up on the screen, the year-over-year listings for active residential listings are up quite a bit from 2021 and 2022. And what's interesting about this is we think that most of these homes that are still sitting on the market are in the higher price point, but we are seeing more inventory. And if the overall trend follows prior years, we might see a nice bump in inventory in June, July, and August. And if that happens, we should, as an industry, see quite a bit more transactions occurring, just because the buyers are here. Buyers are ready to buy. They just need some homes, and we all know that. So here's to hoping for a seasonal uptick in listings. The good news is that tends to start happening right now. So we're in that season where we tend to see an uptick in listings. So we're going to be watching very closely, and we hope to see it increase. So what's causing the confusion here is that we see months of inventory actually being up. But it's the way that the inventory is dispersed. The middle band of properties, which are where most of the buyers are trying to purchase, that's where we don't have enough inventory. If you're a buyer in today's market and you want to purchase $1 million home, you've got lots of options. If you're trying to buy in the 450 range, you don't. There's so many buyers in that range that even though we're seeing an uptick in inventory, there's still multiple offers happening in the 400, 450, 500 price range. I mean, every day we talk to agents who put a home on the market, and in the first 24 hours they have 11 offers. And so we need more inventory in that middle price point, but those people, I suspect, are even more sensitive to the increase in rates. So if you bought a home as starter home, which today would be in a 400, 450 range, and you want to move up to a bigger home or a home with some acreage, or maybe a newer home or whatever, you're now moving from 450 up to 600, 650, and having to accept an interest rate that's 2 or 3% higher than what you had before. The combination of those two things is just too much for most people, which is understandable. So as we see home prices settle a little bit more, if they do, and we see interest rates settle, the affordability starts to come back to within a range of more and more people. And as that happens, we see more transactions occur. So that's what we're looking for. The good news, I think, is that we are at the lowest point, and hopefully as we go through the rest of spring and into summer, we continue to see the number of transactions increasing because rates have settled a little bit more. So hang in there. I think there are better days ahead, and we just got to hold on a little bit longer. Please be sure to like and subscribe, and KFA.